CNBC-TV18. This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, good morning. You know, every day nowadays you wake up and this Davos thing is going on.
Yeah.
Almost like some cold breeze is coming Mumbai's way, right?
I don't think anyone's listening to the conversations. The backdrop is so stunning, right? You can't take your eye off it.
So, I mean, the conversations have got to compete against the background, which is usually not the case.
Well, that's right. But lovely weather, right? You're in Mumbai.
Lovely weather. I mean, the best time of the year. I love it.
Much better than December as well. So I think
much better than Delhi. So Delhi is
I prefer this chill to Delhi and Davos because at least it's manageable.
I can't reach Davos. So I'm good with this Mumbai weather.
All right, so let's kick this off. So we're starting another session with decent kind of global cues, right? I'll get to the global cues, the global bit in a bit, because the big global cue is not what happened last night, but what is ahead of us in half an hour's time or maybe an hour's time, which is out of Japan. But I'll get to that. The Nifty yesterday finally closed above its 20-day moving average. So that's point number one. By the way, depending on how you draw the trend line, it's also closed above the falling trend line from the all-time high. And it's also closed above the recent swing high. But I think the 20-day moving average is a short-term reversal level, and we've managed a decent close above it. The next level to watch is the 40-day exponential moving average, which is very close by at about 18,116. So you got to get this sort of step-by-step 18,116, and then we'll talk about slightly larger numbers at about 18,250 or so, which coincides with retracements from all-time highs and other levels as well. But let's, as I said, get this on a day-on-day basis. The important thing is that, of course, I mean, if you're able to keep your head above the 20-day, that's great. But the recent swing low of 17,853 is held. And I think that is very, very important for the structure to remain, trying to buy the dips, that kind of impulse starting to come back once again. It's kind of disappeared a little bit, but it's there. So, I mean, the market holding some of these key levels will help that. The Bank Nifty also saw, some buying towards the end. The recovery in Bank Nifty was weaker as compared to the Nifty. It was up only about 0.25% or so. The 20-day for the Bank Nifty stands at 42,566. And that becomes the, I mean, if there is a recovery and there is a broad-based move, the 20-day at 42,566 is important. On the way down, 41,742, which is the recent swing low, I think that was the low on the 12th of January. That must be defended for things to stay on an even keel. Now, these levels we've been putting out, and we'll see we come to these or no, and these are important if you're trading short term. The big decision, and this is perhaps where the googly could come from, is the Bank of Japan decision in the next half an hour or the next 1 hour, as I said. And global markets are waiting for this very, very keenly. The big question is, will Bank of Japan end its super loose monetary policy? They are doing QE, which is buying up all the bonds they can get their hands on. They have a sort of a cap on how far high the yields, the benchmark government, Japanese government bonds can go up to. Will they abolish that? Now, if you go by a poll of economists on Bloomberg, and there are some 40-odd responses, more than 40, there is only one which expects the change and an abandonment of the ultra-loose policy. But if you look at what markets are pricing, markets are telling us something else, that maybe something is coming. The yen has appreciated sharply. You're seeing rumblings in the options pricing as well. So it's diametrically opposite to what the economists are saying. We'll find out in the next half an hour, but this is important. If this ultra-loose monetary policy is abandoned, I think the Japanese yen goes higher. It's already kind of come up quite a bit, but it goes even higher, and it puts pressure on most other currencies, emerging markets included. The Japanese yen has been a very important source of what describe as funding currency, because rates have been so low, and an abandonment of that is generally a risk-off thing for, global markets, for emerging markets, everything. As I said, we don't have to wait very long, but I think that is the big one, which we may be talking about potentially, for the bulk of the morning if it were to come about. So that's a quick bit from me. As I said, the global cues which are important are not what happened overnight, but what is in front of us. Guys, hi, morning.
Hi, morning. Morning, Nigel. So, I'm getting a good feeling about the market now after what we've seen in the last few days, right? The big question I'm asking is, are the recession risks receding? Because you're seeing that in terms of not just the screen, but the internals as well. The SGX Nifty this morning is indicating that the start will be in the green. FIs have for the first time this year bought in the cash market, although you can attribute that to the Samvardhan block, which was about 770 crores. But nevertheless, the money has come in both from FIs and DIs, which is one positive. The Nifty is holding on to December lows quite, in a strong way. So that 17,770 mark is a good support for now. Yes, the global handover is a bit on the weaker side. So the Dow was down almost 400 points yesterday. There's an earnings miss that has come in from Goldman Sachs. But there's a lot of data awaited. So there's the US PPI and the retail sales data. Now, it's important to see that if there are any dips courtesy the global markets, do they get bought? Because despite the global handover being weak, the SGX Nifty is in the green. So the start could be up. Remember, there are a lot of individual stocks that are looking good. L&T was at a lifetime high yesterday. HUL is seeing buying ahead of its numbers tomorrow. But my square focus is on the technology stocks. And the question we're asking is the leadership shifting away from banks into tech names again? It may be too soon to tell, but look at the way the index is moving. HCL Tech, TCS, Infosys have all been up this month. Cyient is up over 10% this month. So lots to chat about. But I think the bigger question is that are the bulls sort of getting back to strengthen their grip on this market? It seems to be the case for now, but time will tell.
Well, it's going to be a bit of a test for the bulls, I think, today. Yesterday, we had a good session, but it was partly because of the weekly expiry that we have on the Nifty Financial Index. So that plays out on Tuesday. And yesterday, if you look at it, both the Nifty Financial Services Index, which was playing out the expiry, and the Nifty Bank, they had a good run, particularly in the last hour. That's what helped the Nifty conquer the 100 as well as the 20 DMA on a closing basis. The FIs, they chipped in with a buy number for around 200 crores. I view this positively. Even if you fully adjust for that Samvardhan Motherson deal, and you say it's fully attributed to that, yet that sell number would be much smaller than what we were seeing. Remember, just a few sessions ago, we were getting used to an FI sell number of around 1,500 to around 2,000 crores odd. So institutional numbers, did support. But how did we then gain, to such a large extent? Well, that's because short covering played out. On the Nifty, there was open interest lower. You had the Nifty Bank that recovered in the final hour of trade. And out there as well, there was some shedding out there. And that perfectly ties in what the FIs did. On index futures, they covered more than 10,000 short contracts. They added 5,000 longs. That's what takes this short positioning now down from around 64% to around 55%. On the index option side, well, the call writers, they were writing with gay abandon. Yesterday, they got stuck on the wrong side. There was shedding on the call side, and there was put writing that came back to play. Which brings us to the options data. The 18,000 put, the 18,000 put in yesterday's trading session was very, very active. 40 lakh shares getting added out there. That's giving you a sense. 17,950, that will be the stop loss for those writers. 17,800 put, mix of activity out there. But the call writers, they got taken to the cleaners yesterday. Just take a look at the shedding that we saw in yesterday's trading session. The 18,000 call, massive shedding out there. Moving to the levels then, well, for the Nifty, you'll want it not to revisit that 17,750, 17,800 odd mark. So the hope is maybe, in fact, we put that 100 DMA behind us, hold on to the 20 DMA and try to make a dash towards the 200 DMA. So let's see whether or not that happens today. On a closing basis, you'll at least like to end, above that 18,000 odd mark. The Nifty Bank, that's going to play a very, very vital role. It's around 300 points away from its 20 DMA. You're likely to get closer from a bullish perspective. SGX Nifty suggests a start in the green. I think at some point of time you'll get a dip and maybe in fact risk reward could favor a buy, provided we end above that 18,000 odd mark.
All right, Nigel, we'll keep an eye on those levels. Before we start, let me tell you what is lined up here in the first hour of the show today. We will get you updates from markets across the globe. Richard Harris of Port Shelter Investment Management will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 this morning, we do a fundamental market analysis with Devin Choksi. Lots of stocks to discuss with him in a bit from now.
Okay, by the way, there are a lot of earnings that come out today as well. Interesting ones. There's Persistent Systems, there is IndusInd Bank, there's something like Goa Carbon, there's Rallis. So lots in the mid-cap, non-index side of the market to look out for. But on the equities, first up, we have a comment from Amish Shah of BofA Securities. He expects the start of private capex in FY24 and acceleration in FY25. He says the capex cycle so far was supported only by central government-funded capex, but the government is now opening up monopolies to attract both private and government capex, which is a big positive trigger. He says the beneficiaries of capex growth acceleration are base commodities like Tata Steel, Hindalco and JSW Steel, along with cement companies like Ambuja and Ultratech Cement.
Well, let's get you some money market views as well. Kunal Sudani of Shinhan Bank says the New York Empire State Manufacturing Index for the month of January plummeted, augmenting expectations for a Fed pivot. He says the dollar index is finding support at 101.7 levels and Brent crude prices were higher due to overall weak China data. He says traders are keenly focusing on the release of the US Producer Price Index that is later today and retail sales number for fresh impetus. For the dollar INR, he adds 81.5 to a dollar acts as a strong support, while 82 is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields are range-bound this week. For the rest of the week, he says markets will take cues from Bank of Japan, the US retail sales, PPI data on the global front, and the SDL auction supply on the domestic front. Provided there are no big surprises on the global front, he expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.35% for the week.
Well, we have a lot of stock-specific action that we're going to be tracking for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at ITC, ICICI Prudential, ICICI Lombard, Glenmark Pharma, EID Paddy, and RVNL. They are stocks that could react to positive news flow. While we have Shalby, Eris Life, Tata Metallics, and Delta Corp. They are stocks that will be reacting to negative news flow post-market close yesterday.
Richard Harris is now joining us. He's Chief Executive at Port Shelter Investment Management. Richard, good to have you with us here. Thank you very much. So will we see something from the Bank of Japan? I mean, the question would be moot because we'll get the decision in 30 minutes, but what the heck? What's your sense, Richard? You think we'll hear something big?
30 minutes. Yes, I mean, it looks as if it's been fairly well flagged that maybe the Japanese authorities have actually blinked and they are looking to tighten things a little bit. It's been a bit mystifying as to the route that they took. Of course, nobody wants to increase interest rates, but if everybody is doing it around the world, your currency is going to get hurt. And Japan has had almost a life cycle collapse in its currency over the past 12 months or so. So I think, yes, we are going to see a change of policy. We are going to see things come to fruition, I think, in terms of that. And it just fits in with what's happening in the rest of the world, which is that interest rates are going up.
Richard, you know, we're going to ask you to, after this interview, we're going to request you to just stay there, right there in front of the camera while we proceed with our program. And when we get the decision, you know, we can come back to you for a reaction.
You really
just, you know, so if they were to abandon this ultra-loose monetary policy, Richard, why is that important? Just explain to us, why is that important for global markets?
Well, I'm not so sure it's as important to global markets as it is to Japan. Obviously, Japan is very important, and it's been a real outlier. And we've found, obviously, with the UK, with Liz Truss, is that if you bring in economic policies that do seem irrational in the light of the environment, then you're going to get hurt for it. And I think that's what we really saw in Japan. Now, it does have some global implications. So, for instance, a weakening yen, and especially that much, probably gave a little bit of a lift to the US dollar when we had that real US dollar strength last year that now seems to be coming off the boil a little bit. So you do see these big moves actually having an impact on other markets as well. But I think the impact on Japan is largely domestic.
Richard, let me come in. I have the Bank of England statement that's come off. Bank of Japan, sorry. They've mentioned a couple of things out here. The bank will apply a negative interest rate of minus 0.1% to the policy rate balances in the current accounts held by financial institutions. So that's point number one. This is official release that's come out. And second is the bank will purchase the necessary amount of Japanese corporate bonds without setting an upper limit so that the 10-year G bonds will remain at around 0%. So these are the two highlights that have just come out. I'll try to fill you in with more. But what's your sense with with these two numbers, these two statements that have come out?
Well, rather than maybe increase interest rates, they are looking at putting liquidity into the market. They obviously want banks that have reserves to lend it out. So that's going to provide some stimulus to the economy. And I think that we're almost seeing another QE here at a time that a lot of other countries are trying to sanitize their QE, but not doing a very good job at it. And I think one reason for the general slight lift in optimism we've seen in the early part of the year is people do think central banks are going to continue to keep liquidity quite high, even as interest rates go up. So it does look as if they're following the kind of path we were talking about a moment ago, but maybe in a slightly different way.
So what they have done is they've also maintained their policy balance rate. There's no change in that. That's at minus 0.1%. So they've also maintained their yield curve. So there's no change in that either.
I think that's the headline.
That is the headline,
I mean,
that the yield
there was
curve
no
has been
expectation that the policy rate will be changed, but there was expectation that the cap on yields, which is popularly known as YCC, yield curve control, that will be done away with because they shocked markets in December by increasing the cap. I mean, how much could the Japanese yen float higher? But they're not doing anything this one. So that's the headline. No change, basically. So we can sit back and relax
We
now.
can perhaps move on. And I think for our own viewer and our own markets, right, all of this remains on the sidelines. What's happening here in India is the fact that perhaps recession risks are receding. There is buying that we're seeing once again. FIs have come back into the market. Do you think the worst of the recessionary fears are now behind us? I mean, that's the big question for an Indian investor. What's your own sense?
Well, if we're looking globally, I think that there's certainly been a decline in the recessionary fears that we've actually seen. Whether it's a wise decline is difficult to say. I mean, obviously, we've got Japan making noises about liberalization. We've got the US. Are they going to increase rates more or not? We've got inflation coming down, which could have led to further recession. But further out there, we do have some stress within companies. We are seeing earnings come down, although some of them have been flagged already. We are seeing big firings from big companies in the US and around the world. And I know from anecdotal evidence that a lot of small companies are hurting too. So whereas the markets seem to be slightly more optimistic, I think, than elsewhere, I think Main Street, the actual economy itself is still showing signs of strain, and I'm not sure that's going to go away enough to reduce recession fears.
Okay, all right. Richard, before we let you go, view on India. In the recent past, we've been relative underperformers after a splendid 2022, but slow start to 2023. While the Chinese markets as well as the Hang Seng, well, both of them are running away in the last 45 days or so. What's your sense? China still a tactical play? And for a longer run, you prefer?
Well, it's not very sophisticated, but what comes up must come down. I mean, we're seeing the same in the US dollar. Had a very good year last year. Some of the air started to come out of it. I don't think there's necessarily anything different or fundamentally changed with the Indian economy. It's just the markets reacting to good move last year. And of course, if you do have, if you like, a competitive market, a competitive emerging market, at least in Western investor terms, doing well, then there will be more tension there. And of course, China coming out of COVID, it's difficult to imagine we're not going to see quite a significant pop in that market. It'll be tactical, it'll be for a period, but it probably will impact other emerging markets that would otherwise be seen as other investment destinations.
Okay. Richard, are you hearing anything on oil? I mean, the sort of typical sell side which covers oil, one is starting to hear general yearnings for higher prices, higher levels, or at least predictions.
Yes, I think they will talk their own. They are talking their own book, of course. I think the oil market's quite confused at the moment. On the one hand, we do have all the geopolitical issues, and we have China maybe coming back. On the other hand, I think we do have slowing economies around the place. Shale pumpers have been more active in the US with the higher oil prices, although they're taking a little bit of time to come back. So I think the supply and demand imbalance is quite volatile at the moment. My guess would be that, yes, I think the early 90s are quite feasible. I don't see it going up to 100. But then again, it all down to events, dear boy. And we may have some events, some unknowns to come out that could push oil over the top again.
All right, we will let you go on that note, Richard. It's always a pleasure speaking with you. Thanks a lot for joining in. Let's slip into a quick break on that note. On the other side of the break, our list of top 10 stocks with our entire research team coming up in a bit. Stay tuned. Welcome back to Bazaar Morning Call. Well, this morning, the SGX Nifty is indicating that the start will be in the green, about 30 odd points. Yesterday was a good day. Let's see if there is any follow-on buying this morning. The global handover was not too good, so it could be a tricky day to start with. Let's see. ITC is in focus. It has acquired Yoga Bar, a brand that a lot of us are familiar with. Mangalam, over to you. How does the acquisition look?
Well, the acquisition looks good from an addressable market standpoint, but ITC will acquire, the owners of Yoga Bar entirely over the next 3 to 4 years. What they will immediately do is 39.4% stake is what they'll buy for about 175 odd crores. And then over the next couple of years, they'll also add another 80 crores for a total of 47.5% stake. And this is by March 31st, 2025. The balance stake will be acquired basis predefined valuation criteria, and this is something that everyone will keep an eye out on. The addressable market of healthy snacking and health bars, etc., is close to around 45,000 crores, and Yoga Bar FY22 sales were close to around 68 odd crores, and a couple of years ago that was just about 32 odd crores. So it's a fast-growing market as well. Tranche 1 of the deal has been done at around 6.5 times Yoga Bar's FY22 sales, slightly on the pricier side. So let's see, the rate at which ITC can scale this business. But from their standpoint, the fact that it's a high gross margin and a huge, addressable market, it is a mild positive.
Okay, all right, Mangalam, thanks a lot for that. Well, let's get to some result reactions. Surbhi joining in to tell us about ICICI Pru Life Insurance and ICICI Lombard's numbers. Surbhi?
Hi, thanks for that. So starting with ICICI Pru, strong numbers from the company. The change in the product mix in the favor of annuity protection and non-linked savings had led to a VNB margin of 34%, which is 720 basis points higher than Q3 FY22. This has also led to a VNB growth of 20% at 618 crores. APE, which was largely known, came in weaker, and that was largely driven by shrinking ICICI Bank share. Persistency has also improved across the board. AUM is up 6% on a year-on-year basis, and solvency has also improved at 2.12 times. The stock should react positively. The con call is today morning, so we will watch out for what the management is guiding. Moving on to ICICI Lombard, the company has delivered a healthy 17% premium growth led by health and fire insurance. The PAT has come in at 11% growth, slightly lower than estimates due to lower investment income. The combined ratio was broadly stable at 104%. The ROE came in at 14.3%, similar to what it was same time last year. The management has guided for a continued investments in the retail health business and decline in the combined ratio in FY24, and also improvement of ROE in high teens going forward.
Okay, insurance is what is in focus on the back of earnings. Well, let's move on to pharma now. Ekta is standing by. We have Eris Life, Glenmark and Shalby in focus. Ekta, hi, morning.
Thanks for that. Well, Eris and Glenmark are in focus because Eris has acquired 9 of Glenmark's dermatology brands in India for 340 crores. The deal is at around 3.9 times FY22 trading sales, which is largely in line with the previous deals which have taken place in the domestic market recently. Now, overall, the acquisition will be on a larger scale positive for both companies. For example, Eris's derma contribution will rise to 12.7%, but the street is not too enthused with the matured sales of these brands. Glenmark, it's positive because this is going to be the second sale of a non-core asset in just about a month. So Glenmark is focused in terms of divesting non-core assets, so that's a positive. For Eris, the numbers have been weak, so that's going to weigh. Revenue was up 27%, but standalone growth of around 9.5% missed estimates versus a mid-teen growth expectation, and margins have reduced to 32% versus 36.6% year-on-year and are flat on a Q-on-Q basis as well. Shalby, I expect the stock to probably be in the red because of margins. Revenue was up 25%, but margins were 15.5% versus 17.4% year-on-year and versus 18% last quarter. But in terms of the hospital business, occupancies have risen to 43.2% versus 41.5%. Implant business has done well for them, which is up 153% year on year. So that might remove the sting from the margins, but overall maybe a possible red for Shalby as well as for Eris.
Okay, possible red for Shalby and Eris. Thanks a lot for that. Well, Delta Corp came out with its numbers and Tata Metallics also in focus. Nigel, you're watching both these names?
Yeah, let's go with Tata Metallics since that's my core sector. Well, out there, they had a blast furnace shutdown for some part of the past quarter, but yet they delivered a growth on the top line. The problem is margin improvement was not as much as anticipated. It was up only around 30 bips or so. And the EBIT number, well, on the power business, which is the pig iron business, which is the commoditized business, there was some improvement. But the street would have liked to see the ductile iron pipes business. And the EBIT out there has come in low on a sequential basis as well as on a year-on-year basis. That's despite having volumes up by 10 to around 15%. That said, the numbers are weak. However, quarter 4 will be much better because the blast furnace has revived. Volumes will pick up and also you'll see greater flow in terms of revenues. Moving to Delta Corp, seasonally very strong quarter it was supposed to be. But on a sequential basis, actually, the numbers haven't shown any growth. On a year-on-year basis, yes, on the top line, they're higher, but margins are a bit of a disappointment. The gaming business, well, out there, you had some growth. The margins, though, compressed out there. And there continues to be losses on both the hospitality business as well as the online business. So a bit of a disappointment in an otherwise superb quarter was supposed to come out from Delta Corp, going with red on both these two. But Vivek joins us to tell us about EID Parry as well as RVNL. Hi, Vivek. Morning.
Well, good morning. A couple of stocks on the radar on the back of news flow. So EID Parry, a significant development in terms of the company managing to commence operations at Andhra Pradesh for a distillery now. This particular distillery has almost 120 kiloliters per day capacity. So it's positive as far as, EID Parry is concerned. Some more action seen as far as the railway ordering is concerned. So RVNL and Siemens, have formed a consortium and they've bid for 2 projects. And now they've actually emerged as the lowest bidder for 2 metro rail projects in Surat as well as Ahmedabad. Now, the value of the Surat metro rail project is close to a little over 670 crore and the Ahmedabad metro rail project is valued over 380 crores. Now, this particular consortium, that comprises of Siemens and RVNL is in the ratio of 65 to 35 respectively. So watch out for some positive green tick on both of these names.
All right, thanks a lot for that. And thanks to our entire team. In case you missed out on any of those stocks, here's the list for you. The stocks with positive news flow, there's ITC, ICICI Prudential, ICICI Lombard, Glenmark Pharma, EID Parry, RVNL. While stocks with negative news flow, there's Shalby, Eris Life Sciences, Tata Metallics and Delta Corp. But oil prices have been moving higher. In fact, Brent crude is now above $86 a barrel on hopes of a China demand rebound. Manisha Gupta is here to give us a quick roundup of all that she's tracking in that arena. Manisha, good morning.
Morning, Sonia. Well, absolutely. 2% of gains overnight and trading at a 2-month highs is where we are trading in sense of Brent. OPEC report that came in yesterday expects the 2023 demand to gain up by 2.2 million barrels per day. We also have seen strong Chinese demand for the month of December. China crude oil imports rose by 4% in December as compared to last month and have been on the higher side as compared to last year as well. And we've seen stronger amount of imports for the petroleum products as well, and that clearly has been supportive. Markets also will keep an eye on the U.S. economic data that comes in this week. You have retail sales, manufacturing activity, all of those numbers coming in. The markets are taking some support from that as well. But not just crude, the metal prices continue to surge as well. We have copper now trading at a new 7-month highs. The low supplies, increasing demand are some of the supportive factors here as well. And not just copper, aluminum, zinc and nickel also have seen gains overnight. Markets also are looking at some restocking ahead of the China Lunar New Year holiday. Remember, Chinese markets are shut in the next week and there is buying ahead of that too.
All right, Manisha, thank you very much for that. So that's the action as far as commodity markets are concerned. We'll take a very quick break here. Devin Choksi of KR Choksi will be joining in for some fundamental stock talk. Later, we'll have a lot of commentary coming in from the World Economic Forum, which is underway in Davos, Switzerland. And of course, we'll play out some important, interesting sound bites from the managements of companies like Apollo Tyres, Paytm, Byju's, and many more. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. For starters, the SGX 50 suggesting a positive opening, a 50-point uptick, 60-point uptick. And also the markets were watching by for what the Bank of Japan had to say. There's no shocker coming out of there. So that's pretty good news. So Asian markets as well, they're in pretty good space. But let's discuss a lot of stocks. We have Devin Chokshi who's joining in. Hi, sir. Thanks so much for joining in. Well, we want to ask you about a lot of stocks. But let's first listen in to what Paytm's Vijay Shekhar Sharma had to say with regard to the company getting back to profitability earlier than earlier estimated. That's September 2023. He spoke to Shireen Ban at Davos. Sharma added that profitability will not come at the cost of manpower or business verticals. Let's hear him out.
We are definitely looking at free cash, profitability, very much visibility, and we have, like I said a number of times, that we have said that it is going to be far before than what we have said. But we are not looking at anywhere anything reducing because of that. So lucky to have a business line item that is growing so nicely, and lucky to have a business that addresses large profit pool, and hopefully lucky to become publicly announcing profitability sooner than what we publicly market quoted.
What is sooner than what you
I publicly quoted next September, meaning Q2 of next year, and we just are finishing like a last quarter of third quarter of this year. So sooner, what sooner can it be? Much before than that. Much before a year.
September next year.
Yeah, that's what I'm trying to say. Alibaba, we as Paytm were never a strategic shareholder, or they were never a strategic shareholder for us. So Alibaba exit should have happened, or maybe would have been planned much better, etc., we could have said. But at the same point in time, it is what it is. Alibaba has paired, I think, half of their ownership in the company. But Alibaba and Paytm never worked together as a business model.
Are we looking at a full exit anytime soon?
They don't talk to us like that. And so we don't have any information. In fact, I want to share one of the very interesting surprise. We got to know it is Alibaba after the aftermarket.
Okay, all right. Well, Devin, what do you make of this? The Paytm management, now they're making the right sounds. There's going to be a lot of overhang, though, with regard to supply. So what's your sense on the stock? It's what, less than a third of what it was, a fourth of what it was actually at its IPO price. What would you do with the stock? Do you believe the time has come to get in a little bit, or it's still in a void?
Hi, Nigel. Good morning. Well, I think as an analyst, I think my few questions here would be that I think this profit is basically talked about, I think, either by way of changing the revenue model or by way of cutting the cost. I think which is the model, I think, which the company is basically talking about. I think one would like to deeply understand that part of it. Largely from the point of view of sustainability of the kind of profit that the company is talking about. Should it be increase or the change in the revenue model, and probably, I think, allowing them to increase the prices also at some point of time for the transaction services that they are offering. Also, along with that, I think the commission-based income that they are earning out of the distribution of products. If that particular thing is basically to be counted, then yes, I think it's more of a sustainable kind of a profit growth that one is talking about. But if it is only going to manage to the cost reduction pressure, then I think one will have the reservation on the subject itself. So till the point of time, I think we see the granular details. One would not be overly excited about, I think, the kind of profits that the company would make. At the same time, the amount of money that the company has invested by far, I would like to see how exactly I think this particular return comes, I think, after making the profit. So all in all put together, yes, it's a good news that the company is possibly not going to make more losses than what they were making. We'd like to see how exactly the things shape up on the business model side, then probably take a final call on the company.
Okay, well, you know, there's a lot of talk that took place at Davos, especially in the auto sector. So my colleague Shireen caught up with leaders from the auto space. Sudarshan Venu, the managing director at TVS Motor, who rarely talks, he said that electric vehicles is their primary focus. The iQube has been hugely successful. And Apollo Tyres vice chairman and managing director Neeraj Kanwar said energy prices are a big concern, especially in Europe. Listen in and we'll come back.
EV is certainly a major focus. It's really front and center for us in TVS. We've invested substantially in a range of new products for EV, ranging from scooters to premium motorbikes, three-wheelers, passenger and cargo, and also electric bicycles for the European market. So we have the full range of products which we have invested behind. We've invested over 1,000 crores last year, and we believe we will maintain this pace for the next few years.
1,000 crores every year?
But that's the kind of scale that we are looking to really build a full product portfolio, strengthen the engineering team, build capacity, and roll this out over a period of time. And I think therefore our capex has really shifted away from ICE and in a share terms, much more in terms of EV.
We're grabbing market shares just because of the tires that we've come out with are good in technology. We are going after the ultra high performance tires, UHP, so we're gaining market share in Europe. So capacity in Europe is 90-95%. As far as India is concerned, we are running at 80-85 because the CV cycle was down. Now we are seeing the CV cycle coming up in this quarter. Demand is a big concern, obviously. Energy prices is a very, very big concern. Availability of raw materials also is a big concern. So these are some of the challenges. I think supply chain was a challenge during COVID. Prices of freight had really gone up. They've started softening. So that's given us some ease on supply chain pressures. So yeah, I think it's going to be a difficult time, a challenging time. But I think we have to all look inwards, try and see how we can debottleneck, control our costs, control our overheads.
Okay, so those are two behemoths of the auto space talking about what's happening there. Devin, I wanted your thoughts on TVS Motor. So Darshan Venu very optimistic about the electric vehicle growth. And of course, we've seen the success of the iQube. But the stock has gone from 650 to 1100 in the last 1 year. You think a lot of the good news is in the price?
Yes, Sanya. I would think that, yes, I think to a greater extent, whatever the good news is in the near future, I think is already into the price. However, most importantly, I think the amount of money that is required to be pumped in to build the EV portfolio and eventually, I think, grow the size of the market and get the market share out of it, I think is sounding, I think, a very good task, actually, I think, from the point of view of the investors who have looked at, I think, these companies from last many years. I guess I think it's a rebirth taking place as far as I think the business of the company is concerned. And maybe I think we are likely to see, I think, likes of TVS, likes of Bajaj, putting in significant amount of money in building the EV portfolio going forward. One will have to wait and see how much I think profitability it can produce in the near term. But certainly it's a good news that they are aligning their strategy with the requirement of the time. And possibly, I think, should give results faster than one has expected. Maybe 2024-25 could be the first year in which we could possibly see some major contributions coming out of the EV portfolio for many of these two-wheeler companies.
Devin, you know, from yesterday, good morning, three names which made all the difference to the market. For the Nifty, at least, was Reliance, which did well. HUL out of the blue ended about 3.5% higher. And then there was L&T, which is also up some 4%. Very briefly, any thoughts? What's going on and near term, how are these three looking?
Yeah, Prashant, good morning. Well, I think more than anything else, I think the market is having significant amount of selling pressures coming in from the ETFs, particularly the foreign ETFs. I think who are basically paring their exposure into some of the large cap companies. And as a result of which, these companies have remained under pressure. If you ask me in any of these three names, I think anything has changed fundamentally overnight, I would say no. I think most of the situations, I think for the Reliance or for Hindustan Lever or for L&T, I think remains extremely positive and direction going forward remains extremely convincing as well. So from a perspective of buying the stock at a lower level, should it get hammered? Yes, I think one would like to buy the company into the portfolio, particularly the long-term investors would not miss this kind of opportunity when the fundamentals are appearing strong. And due to technicals, if the stock price is remaining subdued, pretty sure that I think this particular opportunity will not be missed by some of the large investors. Because this company promises to produce, I think, a return of 15 to 20% or even 25% from the lower end of the price. So obviously, I think the business of the company is bought into at lower price.
Okay, all right. Devin, I wanted to ask you about a couple of pharma names. You know, Eris Life Sciences, they've gone ahead and they've bought part of Glenmark's Derma portfolio for around 340 crores odd. So Eris, for Glenmark, it's a positive because it's part of their non-core offerings. However, for Eris, they have also cut their guidance due to slowdown in new launches. Any view on any of these stocks, or from the pharma pack, do you prefer something else?
So I think, on a happy note for Glenmark, I think they are realigning their portfolios. I think that is one positive thing that I would like to think about. And I think most of the pharma companies are basically rejigging their portfolios. They're trying to, I think, get into the product space where they are possibly getting relatively better margins than the commodity margin that they were up till now getting. So that gives, I think, a good amount of confidence. Maybe I think it's Cipla which is basically leading the pack, Sun Pharma which is leading the pack in the complex generics, and I think getting higher margins out from that side. So I think one can focus on few names and systematically, I think, build the portfolio in this kind of times for 15-20% kind of return that one would get out of it.
Okay. I wanted your thoughts also on some of these consumption names. Metro Brands, for example, I beg your pardon, reported a good set of numbers yesterday. It came in just, during market hours, but very strong revenue growth of 25%, EBITDA up 22%. Are these names that you like?
Honestly, Sonia, we don't have the coverage on this company, so would refrain from putting any comments here.
Okay. What about something like an ICICI Pru? The value of new business went up almost 20% over there. In fact, both ICICI Pru, ICICI Lombard. Any thoughts on the earnings?
In fact, I think this is validating the entire analysis that we have been carrying out up till now, that the larger part of the income share that the consumer is getting is now getting shifted to, I think, the protection and insurance companies, particularly life insurance companies, and many of the private sector life insurance companies are basically getting a sustainable basis, 20% kind of a new business premium growth, be it Pru, be it HDFC, or even SBI. I think all of these life insurance businesses have been actually, I think, generating around 20% kind of a growth. So from that point of view, yes, I agree that I think these companies are remaining relatively more favorite as far as adding into the portfolio is concerned vis-a-vis previous years. In previous years, I think the new business premium growth was relatively less, and at the same time, the valuation was remaining high. Today, because of the time value correction, I think the valuations of most of the insurance companies have also come down to reasonable level. And that is where one is seeing opportunity for next 2 to 3 years as far as these businesses are concerned for investment portfolios.
Devin, names like PNB Housing, Manappuram, South Indian Bank, any of these strike a chord?
Honestly, I think we are bullish about the housing finance as a space in NBFC, and we like to remain with housing finance companies. Most of them, I think, are having the promises for building the business with a lending book growth of around 20% plus. Be it in case of PNB, be it in case of LIC Housing, or for that matter, even HDFC, in Bajaj Finance, housing finance subsidiary. All of them are basically showing relatively strong growth, upwards of 20% in the loan book and on a sustainable basis. So should this situation continue for next 3 to 5 years, probably I think these companies are relatively better placed today to add them into the portfolio for a sustainable set of return. I would prefer housing finance companies any day compared to the real estate developer companies, where I see the sustainability of growth in the business and the profits thereafter.
All right, Devin, just stay on. We'll come back to you in a bit. We have about 10 minutes left for the pre-opening rates to kick in. Before we slip into a break, let me tell you what's lined up in the next half hour of the show. Anuj Singhal will be joining in for a quick trade setup in a bit. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. And before the market opens in CNBC-TV18 Stocks Board, we'll highlight the top stocks in the news to focus on for the day. Keep it with CNBC-TV18.
Welcome back. There's 10 minutes to go for the pre-open session. Yesterday we had a solid close. SGX is indicative of another 50-odd point up move. Anuj is here with the setup as he sees it. Anuj, hi, morning.
Morning, Prashant. So clearly, it's a market in which it's rewarding you if you are being smart and not getting swayed by the day-to-day moves. Yesterday, for example, was a good risk-reward day to go long. Today, my sense is that it might be in favor of shorts today and not maybe in favor of longs. Because buying on support and selling on resistance is working. We were at support yesterday, we are at resistance today. The one thing is markets got firm leadership in IT. If you see over the last few days, and point we made ad nauseum, the Nifty IT is up, quite a bit. In fact, yesterday also, if you saw, it was stable. A positional trader's delight. The bank nifty has been all over the place, but mostly and largely down. I think the big reason for that is that perhaps money might be moving from ICICI Bank into Infosys. If you match the delivery volumes of both, you will notice that. Nifty is once again very close to the 20-day exponential moving average, so not a zone in which you want to initiate fresh longs because the risk reward is not in your favor. That 20-day exponential moving average is 18,080 and the 50-day exponential moving average is placed at 18,100. So my sense is that this is the zone in which actually you don't want to buy. Smart traders may want to short and see if that works or not. Support zone comes in at 17,900 to 950, which is a bit lower. On the bank nifty, it's clearly been sell-on rally which played out yesterday in the first half. The second half rally was purely on account of financial nifty's expiry, the weekly expiry which happens on Tuesday. But the bank nifty is still more on a sell-on rally mode and has big resistances placed in 42,300 to 42,500 zone. If 42,600 is crossed, then maybe you see short covering, but that's not my base case.
All right, Anuj. So as you said, ping pong, ping we got. Maybe it's back to pong. Let's see how that plays out. Thanks so much, Anuj. Well, let's get in Sudarshan Sukhani, who's joining, as well as Mitesh Thakkar. Good morning, gentlemen. Well, Sudarshan, you tell us. Yesterday we had a good relief rally on the Nifty. Are you expecting more of the same, or do you expect us to go back to those levels of maybe 17,900, 17,800?
Good morning. See, yesterday we also crossed a small resistance level of 18,050 and we closed almost there. So while it was not a decisive crossover because we were there and we closed there, we did not go beyond it, the chances are that today we will cross that resistance. So for me, when a resistance level is being crossed, I think that's an important landmark, that's an important message. So I would look to go long only today. Now, whether you want to buy on a breakout above 18,050 or whether you want to wait patiently for an intraday dip, which should also come. But the trade is to be on the long side of the market. Your initial stop should be 17,900, which is yesterday's low. But as the market progresses, raise your stops. But I am not looking to take any short positions below 17,900. So far as the Nifty is above that level, looking only to buy.
Okay.
Mitesh, what would you do? I mean, yesterday you were telling us that eventually we get to about 18,250 kind of levels. Eventually. And that's the level at which point you will decide whether this is a bigger move or not. What's your sense?
Yes, I think we are on that process, Prashant. There's good base building on the 17,800 mark. Last 4 weeks, 5 or 6 occasions we've tested that. And now I think, after a long time, the intraday indicators are firming on the upside. So the belief is that we'll go to first 18,150. That is an important pivot midway, and then 18,250. Only if we start showing strength beyond that, then I think I'll look at a start of a fresh up move. Till then, I think I still believe that this is more of a pullback kind of a rally after the base building at lower levels.
Okay, so this is a pullback rally. Mitesh, tell us about the stocks that you like and also this whole argument of money moving out of banks and into IT. I know you've been recommending a few IT stocks in the last few days. Would you continue that trend? Your views.
Yeah. So I think IT is something, which is at least looking like giving a trading rally. TCS and HCL Tech have been on the recommendation list, though I think a couple of mid-cap IT names also, are on the radar. I think Emphasis is now showing signs of bottoming out. So it's a decent space to be in. Again, very much like the market, it will give you a trading rally on the upside. Not still sure that we are starting a big up move on the IT stocks as well. And on the stock side, I have a mix of, I have in fact all buy calls today. A couple of paints name on the list. I have a buy on Asian Paints, recommending a stop at about 2919 for targets of around 2990. I also have a buy on Berger Paints. I think what is common between both the two stocks is that after about 11 or 12 red candles, yesterday was the first sign of reversal, a green candle from oversold levels and intraday indicators looking up. So Berger Paints is a buy as well. Keep a stop at 561, look for targets of 582. That apart, L&T is a stock which I recommended earlier as well. That's a buy with a stop at 2190 for targets of 2265. And ICICI Pru Life is the final buy call. Here I would recommend a stop just below 475 for a first target of 505.
Okay, all right. Thanks for that, Mitesh. Sudarshan, what about you?
Well, I'm looking at stocks that are outperforming, which means even if we have a choppy market today, The outperformers remain outperformers not just for days but sometimes for weeks. So GAIL is one such stock. It has shown strong relative strength. Momentum has turned up after a very brief correction. Consider buying GAIL with a stop under 96. My second stock is HDFC Bank. It had a good day yesterday. It's going in a trading range. I'm expecting this to break on the upside sooner or later. So this is just, I mean, obviously I can't time it and say it will break in 1 hour, but it's worth buying into. So buy with a stop under 1577. My only intraday short is Dr. Lal Pathlab. Lal Pathlab is in a bear market. Consider selling an intraday trade for an intraday trade with a stop above 2165. And my final buy call again is Hind Copper. Hind Copper had a good day yesterday. I think that momentum should continue. Buy with a stop under 125.
All right, thanks a lot for that. Well, let's do one thing. Let's take a quick break on that note. Later, we will connect with Abneesh Roy of Nuvama Institutional Equities to put focus on the FMCG space. There's a brand new acquisition from ITC as well of Yoga Bar. We'll talk more about that. And then we have the pre-opening rates kicking in. Stay tuned.